Hi, Shay Russell here, editor of the Daily Reckoning Australia, and I'm here with Callum Newman. Now, this morning, Callum and I were actually talking about thermal coal, and you were telling me that the Financial Times have reportedly said that thermal coal is at its highest point since 2012. So, can you tell me why that matters?
Well, it just jumped out at me so it's in the highest Australian dollar price since 2012. Why it jumped out for me, the analysts that the FT cited said that the price is pushing up because you've got no new mines have been funded for a long time. They're running down existing reserves, and there's really strong demand coming out of Asia. And that's if you've been following what I've been running in the Daily Reckoning lately across the whole commodity space, I expect that to happen in a range of different things like copper, etc. And it's playing out right in front of us.
So the biggest takeaway here isn't that it's just thermal coal, that there's basically a massive underinvestment in mining around the world.
Yeah, I'm not such a comfortable tipping coal stocks because there's a lot of risks with them around climate change, legislation that could come in, that type of thing. That's part of the mix with this situation. But this whole dynamic is at play across the whole commodity space where companies haven't invested in new production, existing mines are running down, and you don't get this impression from the mainstream media, but the world economy is strong and that's using a lot of commodities.
So basically investors should be looking into the commodity space.
Well, as a general principle, we can say that the ASX is going to benefit from this because we've got some big coal producers on there. The Aussie dollar should benefit because coal is one of our big exports. And yes, absolutely, if you want to target individual stocks, now's the time to do it.
Wonderful. Well, that's all we've got time for today. We'll be back later in the week with more.